Time now for some business news on the programme. We're starting off with a big step forward in a long-awaited Africa free trade deal. To talk us through it all is our business editor, Brian Quinn. Brian, good morning to you.
Nadia, you too. Well, the African Continental Free Trade Area will enter its so-called operational phase this weekend. The African Union meeting currently at a summit in Niger, where it's giving the trade deal its formal launch. Backers are hoping that deal will boost the current low level of trade between African nations, but many important elements of the deal have yet to be resolved, and skeptics say tariffs may be the least of the continent's worries when it comes to trade. Emerald Maxwell reports.
It's taken nearly 2 decades to get to this stage, but African nations are finally pushing ahead with a free trade deal for the continent. 25 of 55 African Union states have so far ratified the agreement, including Africa's largest economy, Nigeria.
It's a remarkable achievement, and one that can even be described as historic, in which the African Union Commission, the Ministers of Trade, the regional economic communities, our traditional partners, and a whole host of experts made available by member states have invested themselves with unparalleled dedication.
AU member states have yet to iron out the details, but they've agreed to eliminate customs duties on 90% of goods. Tariffs on so-called sensitive goods will be scrapped over a longer period. They'll stay in place on the remaining 3%. Africa's $2.5 trillion GDP is expected to take off as its population of 1.2 billion doubles over the next 3 decades. Proponents of the deal hope that it will boost trade on the continent by 60% within a few years. Currently, African nations don't do much business with their neighbours, just 16% of their trade. That compares to around 65% among European countries. Critics of the deal say it's not just tariffs that are to blame, though, and bigger barriers to business are corruption, poor infrastructure, and lengthy waiting times at borders.
That's France 24's Emerald Maxwell. Next, a new study has shown that nearly half of all global pay goes to just 10% of workers. The International Labour Organization says the top tenth of earners take in 48.9% of all income, while the bottom half receive just 6.4%, the lowest fifth of workers getting paid less than 1% of the total. The new data shows that globally, income inequality has actually fallen since 2004, but that is due to rising incomes in developing economies like China and India. At the national level, pay inequality is getting worse, especially in the developed world, and that is cause for alarm. Here is one of the study's authors.
In those countries where you've seen the very top income earners go up, everybody below the top 10% loses. So what the data show is that it's very important. If you want broad-based gains, it's important to focus on the middle part of this distribution of workers.
Time for a check-in on the markets now. Asian index is trading fairly flat on Friday after Wall Street was closed Thursday for the Independence Day holiday. Japan's Nikkei closing up around 0.2%. The Hang Seng in Hong Kong down 0.1%. Shanghai Composite up just under 0.2%. The Kospi in Seoul closing up just under 0.1% as Samsung shares fell there on news of a 56% drop in second quarter profits. Here in Europe, investors largely looking ahead to the U.S. jobs report due out later in the day for clues as to future moves from the Federal Reserve. Most investors expecting hints of a coming interest rate cut. London and Paris both down just over 0.1%. The Frankfurt DAX just barely above the flat line at the open. Finally, for business, telling customers not to fly, a rather unusual strategy for a major airline, but that is what Dutch national carrier KLM is doing. As part of its Fly Responsibly campaign, the company is calling on clients to make responsible decisions about flying, such as potentially taking the train, and as well to participate in the company's carbon offset plan. A growing number of EU residents are trying to limit their air travel, which is by far the most emissions-intensive mode of transportation. Here in France, the government's calling on the EU to end a tax exemption on jet fuel. KLM's critics have called the latest campaign, though, an opportunistic bit of greenwashing, saying a better move could be to make carbon offsets mandatory and eliminate some unnecessary short-range flights. We've seen this flygskam, flight shame trend in Sweden coming a bit to the corporate level with this campaign. I think they're not. Yeah.
I trust, Brian, that means you won't be taking any flights this summer for your holiday. No comment from our business editor, Brian Quinn, this hour on the show. Well, let's leave him to it.